For Morningstar, I'm Jeremy Glazer. Here today with our Director of Economic Analysis, Bob Johnson, thinks that March's data is a wake-up call that GDP in the first quarter is going to be much weaker than many had expected earlier. Bob, thanks for joining me.
It's great to be here today.
Let's look at some of the data that's come in for March over the last couple of days. A lot of it has not looked so great, has it?
Absolutely not. We look at the retail sales that we got late last week. Retail sales were actually down for the month of March, led by auto sales, and certainly those numbers on a month-to-month basis looked disappointing. Then we had inflation, which we thought would be off a little bit, but we lost 0.3% deflation in the month of March, which came as another surprise. And then this week we had industrial production out. And after 6 great months, and everybody's like, yeah, we finally nailed this on manufacturing, they give us a little wake-up call, and they shrunk 0.4% in terms of industrial production for manufacturing in the month of March. So certainly not good news on the 3 major indicators there.
Let's look at how that's going to impact growth. The Atlanta Fed puts out this GDP Now calculation. How has that trended over the course of the quarter? Where do they think we're going to end up for the first quarter?
Yeah, it's a great question. I mean, they started out with their first forecast for this quarter, which is based on data that's already released and combined with some trend line data. So there's no judgment involved. It's a very mechanical process. And they started out thinking they'd grow as about 2.3% in the first quarter. Number crept up to 2.5% by the end of February, and it's been on a downhill slide ever since, and is now at just 0.5% for the whole quarter. That's annualized quarter-over-quarter growth, which is a very low number.
What's the biggest driver of that?
Well, the consumer is obviously the really big driver, as it usually is, because it's 70% of GDP. And what's happened there, the original forecast from GDP Now was that consumption would grow by 3% in the first quarter, which is in the line, maybe a little bit higher than what it had been over the last year. And now they're already down to just growing 0.3%, almost no growth at all. So clearly, consumption is driving most of the decline. Most of the other categories really haven't changed that much over the quarter.
So with that big decline, there's nothing that's picking up the slack. Housing or business investment, none of that is making a difference?
No, but I will say the one thing that will happen, I've been complaining for a long time that this has been a very unbalanced economy. Well, this quarter, consumption looks like it will be knocked off its pedestal. It's accounted for almost all of the growth over, say, the last 18 to 12 months. Now it looks like maybe this month it's a horse race between whether business equipment spending or residential investment will kick in the most, but it certainly won't be consumption this quarter.
This quarter looks like then it is going to fit this pattern of really weak first quarters that we've seen for a number of years now. Will it turn around? Can we make up this slow start to the year?
You know, we all usually say, oh, we just know it's weather and then the seasonal factors are faulty and it's just going to bounce back in another quarter. But you know what? It just never quite comes all the way back. And I think that we're going to have a weak first quarter. And it's going to be impossible to make it all up. I think even if we grow 2 to 2.5% the rest of the year, it's still, when you start out that week, it's going to be a little bit hard to get to anything much over 2%, which is about where we're at for 2017. But I think a lot of people are going to have to pull in their forecast. Now, remember, there are quirky things, so I'm not just kind of rose-colored glasses saying, well, just because they're bad, they automatically have to be good next quarter. There are some very interesting things, weather-related things always seem to mess us up in many different ways. Apparel sales have been awful. The weather just hasn't been conducive. The seasons and the temperatures haven't fit what lines are in the store, and there's Amazon pressures and a number of things going on that have really complicated the numbers. So apparel sales affected consumption rather dramatically. Certainly with the weather, one of the big things is utility usage flows into consumption, and that was certainly at record lows in January and February. Now it's balanced a little bit in February. Some people are a little bit, oh, maybe consumption won't be so bad. Maybe we were a little better in March. I don't think it'll be enough to overcome that, but certainly that weather factor is out there. And then you've got things like when weather is bad, as it was for a couple of days here and there, you have the issue where it's a hotel room or a restaurant sale that, guess what? If you don't use it on that day, somebody doesn't eat out another day instead. It isn't like buying a car. Okay, it gets delayed a week. I buy it because I couldn't get to the dealership. With a restaurant meal or hotel room, you don't sell it, it's gone. And some of that data was weak in this report, and that won't be made up. I mean, we'll go up to higher levels than we were, but we're not going to get it back, so to speak.
Well, Bob, it sounds like you're predicting that we're going to stay in this slow growth world.
Well, I think that's true, but remember, we've always been in the camp that, this isn't going to be a great year for growth. As inflation comes back up to more normal levels, we're not saying it's going to get out of control, but as it comes back to normal levels and wages don't accelerate as much as inflation has, and the consumer begins to lose out, and you see this slowing consumer spending. And I think that's a little bit of what's disguised in some of this data here. And I think that demographics are really driving things, and I think we're looking at 2% growth at best as far as the eye can see, which isn't an awful deal for consumers. It isn't such a great deal for businesses.
Bob, thanks for your thoughts today.
Thank you.
For Morningstar, I'm Jeremy Glazer. Thanks for watching.